the beautiful Black Acres listing that probably needs a total renovation, but everyone loves it. That location is beautiful. I'm Kristen Rabell, and that's not Rebecca Johnson.
It is not.
I'm in a very weird spot because it's where Rebecca usually sits. So should I say I'm Rebecca today? Just kidding. I'm Kristen, and this is MARC SPIWAK, my friend, a great lender in town, someone that I trust, someone that I use, someone that I send my realtors to, and here he is today.
Yeah. Thanks for having me, Kristen.
Definitely.
Yeah.
Advisors Mortgage Group. You weren't always there.
I wasn't always there.
Yeah.
So a lot of years with Wells Fargo Home Mortgage, about 13 years. And recently branched off to Advisors Mortgage for the last few years. Yep.
Yeah, but you've been doing great there. And the buyers all have some wonderful programs that you have for them there, right?
Yep.
And it's not the big old Wells Fargo.
That's right. That's right.
A lot of people have
a little smaller.
Right. So you'll have to tell us about that a little later. But because Rebecca's not here, we're not going to do the market update, our Monday market moment. So we'll just dive into it. We've got a list of topics, but first of all, let's talk about the weather.
It's cold.
It is really cold.
It's
for
freezing.
Gainesville, it is really cold.
I don't like it.
So I bought this smart wool.
Yeah.
That's what it's called, this shirt for when I went up to Michigan over winter for skiing. And here I am wearing it in Gainesville today.
I know. Yeah, me and my wife were talking yesterday. I was like, can we just move to the Bahamas where I don't ever have to deal with the cold? And she goes, well, I kind of like the change of season. I was like,
no,
okay.
No,
right,
I like to go travel for like a week.
Yes.
See the snow. That's the problem with this weather. You should have snow. We should be able to go ice skating and skiing in this weather. But
so go and leave, be able to leave. Mm-hmm. Kind of like having a
or at least
baby.
Enjoy.
You rather take the baby and give it back, right?
Right. That's why grandparents are.
That's right.
They love the role.
They love that
right?
role. That's right.
So yeah, I actually lived in Puerto Rico for 2 years, and it was constant perfect weather.
Perfect,
so yeah, I mean the summers were really hot and it was really rainy, but that was beautiful. Love that. So I'm there with you.
Got it.
Right there with you. All right. Real estate, the market. What's going on?
Yeah, I mean,
what are you guys seeing on your end? Because I know what we're seeing on our end as realtors.
Yeah, and people ask me, every week, are you busy? And I'm like, I am busy, but that doesn't necessarily equate to fundings.
Right.
So I have a whole list of people who want to buy houses, but we can't get them any houses.
Right. So you get them pre-approved and ready.
Correct.
But they're sometimes waiting, where usually the turnaround for that is, a day, a week, within the month at least, right?
For the...
When you pre-approve someone and then, you know that they're ready to go, you're pre-approving them slightly before they start. And so within a month, we'll say at worst.
Sure. It could obviously be the same day.
Right.
They could, or it could be
or
2 months.
Worst case, the month. Right.
Yep.
2 months.
Yep.
But now, what are we seeing?
Yeah, we're not seeing anything. That's the problem.
Right, exactly. So, I think as realtors, we're also really, really busy, but not seeing all the time that end result, because we're putting 5, 6, 7 really strong high offers that would win in any other market, but aren't winning because there's so many more high offers.
And I was talking to a realtor yesterday who told me that if you take out condos, you take out commercial, and you take out vacant land, single family detached, there was 300 and something homes.
Yeah, that's
on
what
the
we go over every Monday, so we don't have that, but yes.
I couldn't believe that stat.
So actually, that's a really good chance for us to talk about right now. Will you bring up that map for let's put this out there so everybody else can see it. So what do you think Miami, Florida, Boston, Massachusetts, New York City, New York, and either San Diego or San Francisco have in common with Gainesville, Florida? Do you see that little red mark in the middle of the state?
It's definitely not the weather.
Definitely not the weather. It is a housing shortage. This is from the National Association of Realtors. They have a link for realtors to go in and see where the housing shortages are. And this does not include, it's based off of every permit pulled for a single family home, to build, and in each area, and then how many jobs are coming in.
Okay.
So, or jobs that are starting. So there's 1 in 5 in Gainesville. And it's about 1 in 11 in Miami, and 1 in 7 in some of these other states and areas. The bigger cities, it's 1 in 11, 1 in 10. Ours is 1 in 5. But we are, and again, this is residential. So we have a lot of permits out there for these large condo complexes, or we should say apartment complexes.
Right.
So those are not included in here, so not the rentals. But if we did that, I do have to say it says we have a sufficient supply, but that just means you're renting. So Rebecca and I have talked a lot about like this rental nation.
Right.
Because there's just not a lot of houses out there. So that kind of goes hand in hand with what you were speaking about with the other realtor.
Yeah.
Is that there's just not a lot of houses out here.
South Dakota looks good. We can maybe get our license there.
Well, that just is telling me that not a lot of people are moving there and starting businesses.
That may not
work,
be good.
Right.
Either, right? Yeah.
Exactly.
So
when you do have a buyer that is able to win, it's what do you see that's the most common thing in all of these?
Oh gosh, obviously I think from the listings agent standpoint, they're looking for a couple things, and you can correct me if I'm wrong, but one is the type of loan. Okay, right. Is it conventional?
Yep,
is it
that's
VA?
What was on my list too?
FHA, USDA.
Right.
Is there a significant down payment? Okay, obviously. Right. Something with 20% or even more down.
Right. So if you have a conventional and you have 20% or more, you're going to beat out the conventional with just 5%.
Correct. So I think that factors into play. I also think, we are where we are in this market, and, with the, when somebody knows the name of the lender and knows the person, I think that pre-approval letter, depending on where it comes from, is carrying a lot of weight. That's what I've been hearing from agents. So
I think it's always the case, but even more so now.
Yeah.
Like we put a house on the market this weekend, and Rebecca was that lead on that. 6 offers, and one of her biggest things was all of those things we're talking about, but is this a local lender that I know that I can call and get, make sure that this is real, this is true. It's not going to be hard. I can call them if it gets hard. And then also sometimes the other realtor on the other side. Is it someone new or someone that's difficult to work with or someone really easy to work with? So
and that exactly is what happened to me yesterday from the realtor that I talked to, told me about the shortage, was like, we had 5 offers, and actually they took our offer because they knew our name and they knew the buyer's agent's name over a cash offer.
Wow.
At the same price.
Wow.
So
okay. Yeah, there we go.
Yeah,
good job.
So that one worked out well. So there's a lot to that. To that.
So do you know if this cash offer was coming in from another area with another outside area realtor?
It was an inside realtor, but it was somebody who wasn't in the state. I'm not sure how
really see the house. Yeah,
I'm not sure how much that matters.
I think in real estate, on the real estate side, if you don't know this on the lender side, I do think a big part of that is we've always sold houses to people who had to see it. Just pictures or video, but it's even more prevalent now. And although we don't want to stop these people from coming in and buying, if you have 5 to 10 offers and there's a local person who's seen the house, again, local agent, local lender that easy to work with.
That's right.
Those are going to trump, and that's shocking. That's great for you. Good job.
Yeah, that one worked.
But winning the over the cash. Yeah. So I don't know if anybody's watching, but if you have any questions for either of us on what the best offer, what are some of the things that you need to put in for your offer to make it the best and to stand out? Certainly write that on there and we'll let you know. But I think a lot of people are really interested in where the rates are going. Yeah.
So definitely, that drives a lot of our business. And, end of last year,
do you see any questions up there? You can either wait or let us know.
How many years have you been originating loans? So I started the business in 2001. So I'm basically 20 years in. So yes, I am a dinosaur. Yes. So So if we back up to the sort of the end of last year, which that wasn't that long ago, 3 to 4 weeks ago, the 3% rate on a 30-year fixed was in play.
Right.
Okay. Fast forward to last week, we, with no points, we were, hitting around that 3 3/4. So that's about obviously a 3/4 point spread there. And, we've gained a little bit at the end of last week, and maybe the market's doing pretty decent today, not the stock market.
Right. The stock market.
That one's going the other way.
Right.
but so, we might have gained an eighth of a point back on that. So, but somebody was asking, well, what does that really mean,
Right.
Mark?
That's what I was going to say.
So
What does that really mean?
Yeah. So if our average loan size in Gainesville has been around 250, 275. So that's the loan amount, not
Right,
the purchase
not the purchase price. Yes.
Right. So after they put money down. So, that 0.75% probably adds $125 onto the payment. So, that's $125.
Sure, but it's not a huge kick.
It's
right?
not. It's not. No. So, everybody's tolerance level on $125 is different, of course.
Sure.
But that's what it means to a buyer today is
So 125 more than
on a 250, 275. Yeah. So
yeah. So, I think that's a good way to look at it. Really look at the numbers. Is it really affecting me? I know that there are buyers that come in and say, I don't want to pay any different than I'm paying now.
Right.
And so you have to think about the taxes, the insurance, HOA, which is not in, the numbers that you're giving, but plus
and
the difference of, the point system before, the point system now. So, well,
and by the way, that adds, so if you want to back that up, do it backwards, it's for every 50,000, for every 10,000, it's about $50 on the payment.
Okay, there you go.
So that's another way of thinking about it.
About that. Right. Now, here's a question. Do you agree that owning real estate is a hedge against inflation? This is...
Yeah, well, inflation is definitely here,
Yes.
As we've been to the grocery market to get a loaf of bread. So there's no doubt. And that's why I think the rates are going up is to hedge from inflation. Look, I think I always say this when people ask about diversification. I think you diversify in numbers of different things, the stock market, the real estate. So, I don't know. I may defer that one to you, but I like diversification, whether that's owning real estate or owning stock. I like it both. So
I do too. And I know that Rebecca's not on here, and she's a little more. Well, she's not on here, but she is here a little more on the real estate edge of that.
Right.
But yes, I like diversifying as well. Even anything newer coming on. What else do you invest in?
Well, that's pretty much for me.
Do you do any crypto?
I do not.
No, you do not. Okay, so you're
Do
not
you?
as diversified. I do.
Okay, yeah.
Not as many as some other of my friends.
Yeah.
Not as much. And sometimes they'll tell me what they've done. I'm like, gosh, I should have,
Yeah.
done that. But I think that happens with anything, right? I should have bought that house. I should have
Sure.
bought that stock. I should have bought that crypto.
That's right.
So I do play with it.
Yep.
But I don't. Again, play with it in the same way that
Right.
some others that are sitting there constantly, buying and selling.
Right.
Renovation loans. Do you do renovation loans?
Yeah, we do, and we actually have a specific department for that, and
Right.
they do a hell of a job with it. They really hold our hand because look, when we do loans all the time and we touch loans all the time, but when you are doing something you're not accomplished to doing every single day,
You got to pass it on to somebody who knows. And that's why it's good to have that program.
Yeah,
Right.
it's tricky. So here's the reality of the renovation loan. It's very fun to talk about. It's very exciting.
But it's not fun to be in the middle of.
Right. So there is so much fun and discussion about it. And it's a wonderful product, right? But I always start the conversation with the customer as, okay, this is great, this can work, but you almost have to make it become your full-time job. And so if you don't have a job,
Right.
that's great.
Okay.
But if you're working 40 hours a week,
And what way does the buyer have to make sure? Because I know that you probably have a contractor or book of contractors that are available within your program,
Correct.
right, to do this, that you approve. And then they have a list of the items that they want done.
right.
And now in this market, it's probably a lot harder. We're actually going into a renovation loan, very possible with a buyer, and who's one of your colleagues' buyers.
Okay.
So they have their list. They're getting everything together. In this market, though, it's probably really hard on the general, right, to do a renovation loan because that's just an extra contingency for most sellers who
Right.
want to get out.
That's
so
right.
that they can go buy. But in the off chance, like in our situation that you have to make sure the offer is well under where it would appraise for, right? Because you have to add on that
Correct.
extra cost
Correct.
and make sure it still appraises.
Correct. And they do a little bit of a contingency factor. In other words, they give maybe 10 or 15% on top of whatever it appraises
Okay.
at. So if you do
Okay.
have a little bit of a shortfall there,
Right.
the program itself can
Allows
cover
that.
that 10% or so, yeah.
Okay,
Yeah.
that's good. Has anybody ever have to go outside of and pay the difference because something costs
The
way more and they
limited
still
ones
want it?
that I have done, I have not seen it.
Yeah.
But yeah, so it's pretty rare because typically when you're buying a home like that, right? The reason you're getting renovations is it needs a lot of work.
Right. It needs
so
even more
that,
than what your list is.
that usually means you're buying it for undervalue.
Yes.
So you're starting typically in a good equity position. So I think that's going to be a rare case,
I
but
think
it's
so,
not
too.
to say
Right.
that it couldn't happen. And again, love the renovation, love to talk about it, but because there's some uncertainty there, that's what makes it a little nervous.
Right. It's a little more of a complicated
Yep.
deal.
Yes.
Right. And so the buyer does have to understand that and know that they probably have
Right.
to be on top of
right.
everything.
That's
Yeah.
right.
Okay. Well,
Good question.
I don't think renovation loans are around a lot, and I think really the conversation more so is again about rates. But let's go ahead and take a break.
Yep.
And we'll come back. And I'm
Sounds
telling
good.
you, this goes
Let's
fast.
do it.
Looking for outdoor areas to enjoy in Gainesville? Once a railroad site, Depot Park is a contemporary public green space that serves as Gainesville's Central Park. The park features a children's play area with custom splash pad, a picturesque Water's Edge promenade which hosts special events like festivals, 5Ks, and performances, the Depot Station for any needed eats, and the Cade Museum. Next, we have Westside Park, with 1.5 miles of shaded hiking trails, 3 playgrounds, a skate park, and much more to experience. You'll never get bored with Westside. Book a swim lesson at the pool for your little one or a tennis lesson for yourself. There's fun for all ages. Lastly, we have Hogtown Creek headquarters, located on the north side of town. This park is home to a shaded playground, fitness trail, and zip line. Once home to a dairy farm, cows, fences, and milking barns, the 70 acres have since been transformed into a beautiful homestead-themed outdoor getaway. Please visit buysawrebell.com to learn more about parks in Gainesville.
All right. That was another great video voiced over by Rebecca Johnson and created by Short Media. So lovely about our Gainesville parks. Great little parks around here. What do you like to do outside of work?
Well, I used to be a big golfer.
Yeah, you went to school for golf, right?
Yeah,
On a
and-
scholarship.
Yeah, and my good buddy once told me, said, when my kids were just being born, I have a 13 and 11-year-old, and they said, Mark, your golfing days are about numbered. And I said, nah, that's not going to happen. I may not play as much, but I'm going to be out there. But damned if he wasn't right.
Really?
Yeah,
So they don't like to golf themselves?
They don't. My son got into it a little bit, but
Not
it's
quite as much as you.
Yeah, it's I'm sure I'll get back into it one day, but for now, work and kids
Yeah.
and family life are taking over.
Right.
Yeah,
Well, you're
that's
running
okay.
that WCR
Yep,
event,
yep.
golf event.
That's
we
right.
always had fun with.
That's
But
right.
you've sort
Coming
of
up.
passed that along, passed the buck. You're there for
no,
help.
Yeah, no, I can't seem to get out of it. So I feel like,
It's
I'm
a great
stuck.
event, though.
It is fun.
As long as you get to golf in it.
That's right. That's right.
As long as you get to golf in it.
That's right.
Great.
So no, I enjoy doing it.
Well, we've got a question here. Do you think rates will reach 5% by the end of the year?
Yeah.
If yes, can buyers lock rates now?
Yeah, great
All
question.
right.
All right, first ones first. I think. Well, let me say this. I've been wrong every year for the last 7 years. So what am I to
Your
say
golfing
that?
average is
Yeah.
better,
So
just not this.
take this answer for what it's worth, right? No, I keep saying every year that the rates are going to go
Right,
up,
and
and I
they
was
have not.
finally right this
Yeah,
year.
right.
See,
Mhm.
I was right.
little poker,
That's
yeah.
right. So I think. That's my concern is they get up to that neighborhood, and the answer is no. I don't believe that will happen.
You think more like 4%?
Yeah, I think
that's what I'm hearing.
we had this initial kind of wave shock, whatever you want to call it, 3/4 to a point.
Right.
I think what we're seeing now, we're starting to flatten a little bit,
Okay.
and I think maybe that's going to be the course for some
Plateau
months to
there,
come.
and then
And then, could we, could we see a little bump into the fours? I think that's definitely possible,
Right.
but low fours is probably about where we're, as high
Well,
as
we
we'll
might
get.
end up, right? 5 seems a little high. I mean, granted, if you compare it to like the 80s, 5 is great.
That's right.
But compared to what we've been experiencing the last few years,
right.
it is high. So how can you give golf lessons?
So this,
He'd probably love to be back on there.
yeah. So the second part of that,
Yeah,
can
the
can
second
you
part of that. Yep.
extend longer? And the answer is yes.
With
now,
money.
with money, yeah. And look, every lender, is going to have something different, right? We're all
Right.
not one. And that's the beauty of it, I guess. But we do have an extended lock policy, like some other people, and we can extend all the way up to 1 year. So,
Oh, wow.
yeah.
Okay.
So
See.
now, but like you said,
Learn something new, right? It does cost.
that does cost. So do you weigh paying the upfront cost to extend, or do you just float the market? And if we had the crystal ball,
we would
Kristen,
know what to do.
we would be in
but
Hawaii,
We would be really wealthy.
where the
right?
weather's warm.
I like it. Too bad we
Yeah,
don't have that crystal
that's
ball.
right, that's right.
Yeah, so it's hard to determine what the best outcome is, but it is possible. Are
Yes.
you seeing it more often?
Well, we are. So we're getting more questions now about, and especially on new construction, when
Right.
homes
Oh,
are.
yeah. So they're taking 9 to 12 months to build
Right.
something that these little spec homes that took 4 months to
That's
6
right.
months before. Yeah.
That's right. So
For sure,
those
experiencing
people
that.
are coming in and saying, I'm worried the rates are going up. And I say, I get it. So, but do you want to pay this
Right.
to get this? And, you got to kind of weigh it out. And
How often are you seeing the yeses, if you can sort of pin it down with a percentage?
yeah, I mean, it's really just come out because
Okay.
we've been in this 3-week period
Right.
of rising
Of
rates.
seeing these rising rates.
Yeah, so
really the questions are more happening now, not
Correct.
necessarily the decisions, but you
Correct.
might see it soon. Right?
Correct. So,
Especially if we continue to see this
yeah.
rising
And
rates.
usually if you can float within to the 90-day period, then there's not much extra cost.
Mm-hmm. Right.
So that's the key time frame is 90. But yeah, if you're looking for a 6-month lock, you're gonna pay a little extra for that.
Right. All right. Well, you have another really great topic here that we could talk about really quick before we go is the new condo guidelines for financing.
Yeah, and I'm still learning them myself.
Okay.
So,
okay.
but I will.
When did these come out?
They came out the January. Yep. And a lot of this stemmed from what happened in South Florida,
Okay.
down in Miami when the half of the condo collapsed. So, yeah.
Terrible, but yes.
Yeah. So, basically, as you may or may not know, when we go to do a condo loan, we have to get a condo questionnaire submitted to the homeowners association dues. And basically what's happened is they've added some more questions onto that questionnaire that talk about safety, structural, engineering. And so, again, still too new.
So who's answering this? The HOA still?
The HOA still,
Okay.
yeah. So
Or the insurance agent, maybe?
correct.
Okay.
So it's still too new to see what the outcome of that is going to be. Is it going to kick out more? Of course, it's going to kick out some
Right,
deals.
but then it's going to be difficult for some condos in general just to even be able to sell.
Correct.
So as a condo owner who wants to sell in this market, you're going to have more of these issues.
That's right.
So
Yeah.
even though it's a great market to sell in, tons
That's
of
right.
buyers. Now, something that I've noticed is that a lot of these investors are coming in to buy in Gainesville, buy condos or attached houses that are in an HOA, in a condo HOA. They are coming in with loans, conventional loans, but there's plenty of them that make them unwarrantable in the sense that there's too many investors already.
Right.
So it's unwarrantable. Have you seen that a lot lately?
Well, yeah, there's been people, that market has been there, investment condo. And look, condo in general, because of this questionnaire,
Right.
is trickier. But then you throw investment condo on top of that, and that's another level. And like you said, if the complex has a certain percent of investment concentration or more, typically that's 50%,
Right, 50% or more.
it can kick out, the potential buyer.
Now, it doesn't necessarily always kick out the buyer who's purchasing it for homestead purposes.
Correct.
They do have to put more down, 20 to 30% right?
Well, the primary occupancy could be as little as 3 or 5.
3 to 5. Okay,
Right,
see,
right.
there you go.
And then the investment.
But the investor may not even be able to purchase at all if
correct,
it's unworkable.
correct.
Now, if it is right at that edge,
Mm-hmm.
they can still potentially purchase.
Well, the good news is, from my understanding, is if on that investment condo, if you put down 30%, then the investment concentration goes away.
Right.
So
because you're putting enough equity in
You're putting
already.
enough equity in. So we've got a couple deals going like that now, where they're putting 30% just to avoid all of that
Right.
conversation. So there are loans out there for investment condos. Yep.
Okay. And then construction to perm loans.
Yeah.
You all do that as well.
We do not.
Okay.
We do new construction, but the end loan.
Mm-hmm.
But yeah, we're not at this moment doing the construction to perm. Yep.
Is that being at this moment because of the current market, or just don't have the program for it yet?
As long as I've been in the business, unfortunately, I guess I should say unfortunately, I have not been able to participate in that.
Okay.
It's typically a banking product. So there's a lot of nuances to that we just haven't had the opportunity to do.
So if you have someone, you just refer them to someone else,
I do, yep.
or
Yep.
try for a
we
different
always
one.
try to find a home
Different
for them.
one,
So if
right.
somebody calls me and it's something I can't do, being in the market as long as I have, I always try to help them find a home or a loan, I should say.
And said, all right, well, see how fast this went.
Yeah, this is quick,
We're
huh?
already over,
Yeah.
right? We have so much we could talk
Yeah,
about.
no doubt.
But we did get your golfing days in there. So
That's right.
actually, could you put that back on the screen? This is the best way to reach out and, call or email. So your phone is 352-246-6532 or SPIWAK. I say it like that because it's a W, but
Yeah.
you're SPIWAK.
W's like a V.
Yeah.
But I've been called worse. Much worse.
And at advisorsmortgage.com. So yes, we have secured the whole 10 for Rabell. We're always in the
Yes.
WCR.
Most important thing of the
event
day.
at number 10. So yes, that'll be a fun. It's coming up March. Always a fun
March
one.
18th. Yeah.
March 18th. Yep.
yeah.
So we'll be there at whole 10 like we
At
always are.
Hogtown Country Club.
At Hogtown Country
Yeah.
Club. You are right.
That's right.
It has changed the
That's right.
name.
That's right.
No longer Hale, now Hogtown Country Club. But we'll be there. So I want to thank you, Mark, for coming
Yes.
on here.
Thanks for having me.
Yeah, if you want to come on again, let us know.
We'll do it.
We love having you on here. It's always great to talk about what's going on in the market and on your end and what you can do for others. And we'll see you tomorrow at our
All
office
right.
too.
You got it. See you then.
All right, so we're going to go through some slides that we always go through. This is a good Rebecca slide, but I'm going to just read it out. So are you tired of being a leasing agent, an accountant, a repairman, inspector, landlord? Is it just getting too hard for you? Well, we can help you with that. So you can call us at 352-213-6410. We'll let you know how we handle all of that for you instead. And then if you're looking to get into real estate or join a team or change where you're working now, please email us at join@buysellerbell.com and we'll be happy to meet with you and answer any questions. Also, if you want to get social with us, remember we're on Facebook, we're on Instagram, TikTok, Google, LinkedIn, YouTube. So get on our YouTube page, watch these videos. We have other ones, other podcasts, other videos, and subscribe and share. And then we always ask you, did you know we have a blog? If you don't know, we do. And we actually had a great blog about Ocala, the Ocala market, just recently. So hop on there at buysellerbell.com/blog to read all about Ocala. And then we always like to thank the Fiesta Media for this podcast. And if you'd like to get into a podcast, why don't you come on ours? Why don't you get a podcast for yourself?
Yeah, all right. Yeah, sure.
Call Elio. Come on ours, though. Check it out. And contact Elio at 352-327-5089. The Fiesta Media. Bring the Fiesta. All right. Thank you, everyone, for coming on. Thank you, Mark, for being here. Always a pleasure. We'll see you next week.
Bye.
Bye.